Today we're here with Kyle Visser, team lead and broker at Reside Grand Rapids. Kyle, thanks for joining us.
Yeah, I appreciate being here.
Yeah.
Always a pleasure to talk real estate and help show the picture of what's going on in the world.
Yeah, so today we're here to talk about the housing market, as I mentioned, specifically in Grand Rapids, and some of the key trends that you're seeing play out as we kind of jump into spring.
Yeah, I've been doing this for 10 years. I would say one of the biggest key trends is the fourth quarter of last year was crickets. Call it elections, call it interest rates, time of year, whatever it was. I had a lot of clients come to me say, hey, we're thinking about selling. And I told them kind of push pause because the market was really slow. Now, fast forward to early March, all of a sudden we're seeing an early spring market that is showing signs of going to be a really busy market. And Grand Rapids was actually just voted #2 seller market in all of the U.S.
So what are some of the things you attribute to all of a sudden movement occurring in Grand Rapids?
Yeah, I think there's multi-factors, right? I think regardless of political positions, we're past the elections, right? It is what it is. Here's where we're at. And I think people wanted to see that play out for whatever reason. And now we're also seeing kind of people succumbing and being okay with the interest rates, right? That was the big thing that slowed the market. Interest rates were way too low for way too long. And a lot of people locked in at that 2.5%, 3%. And then all of a sudden it tripled almost overnight. And that gave people sticker shock. And all of a sudden people either couldn't afford it or didn't want to afford that new, nicer house or whatever, make a move because they were kind of golden handcuffs in their current mortgage, their current house.
Do you think that's kind of settled in now at this point where people are saying, okay, rates have been higher, maybe we were out of the market and we're going to come back into the market?
Yeah, I think people are accepting that this is going to likely be the norm. Maybe they come down a little bit, maybe they go up a little bit with inflation numbers, we don't know. But right now we're seeing that mid-6s, high-6s, which historically is not that high.
Right.
But when you compare it to what people kind of locked into before, it feels really high. But we are sensing buyers are now saying, hey, I don't love my house. I have a third kid, or it's time to downsize. Whatever that is, it's not just death, divorce, stuff like that pushing people into new homes. It's actually that normal, traditional buyer coming into the market saying, you know what, we're okay, we can afford the next home, we're ready to get out of our current home for whatever reason and buy that next home. So there are a lot of buyers.
So I would assume then, I mean, supply and demand is kind of the number. We've heard that supply is lower in Grand Rapids. Now there are more buyers coming into maybe the higher end luxury market that you deal with.
Yeah.
What are we seeing, or what trends are we seeing in the prices? Are they starting to rise rapidly, slowly? Where's that going?
I think we're an anomaly here a little bit compared to the U.S. And generally, the U.S. I'd say is pretty stagnant. Some markets going down. Grand Rapids continuing to go up.
Okay.
Whether it's because we don't have natural disasters, we have natural water, we have, just a nice living experience here, and historically has been undervalued. I'm not sure exactly what it is, but people are continuing to flock to Grand Rapids, West Michigan specifically, and really want to call this home. And it's bringing big money in, it's move up money, whatever it is, which purely supply and demand, we have a low inventory of homes across the board, all price points. So we are starting to see multiple offers again, waiving inspections, all those crazy things that we saw for the previous 7-8 years are now back because the buyer demand's there. Demand is there, supply is not.
So if you're a seller, and we've talked before you walked in here, hey, sellers maybe were sitting on things in the fall. Do you think that maybe there'll be an influx of inventory this spring with sellers now saying, hey, there are more buyers available, I might be ready to move? Or what are you seeing there? Or is inventory still going to stay short?
I think it's going to stay short. It's been short for a long time. I think it's anything. I always say if a decent product, a good product hits the market and it's priced correctly, it will sell immediately or with multiple offers. So as long as you are pricing it within market value and you have a good product, meaning not super unique, super gross, whatever that word is, if it's a good product, it will do well right now. I think that will keep inventory down because as they come up, they're going to come off and quickly. I mean, average days on market is days, not weeks or months. Now, with the caveat that, sure, some $2 million homes that I represent might take weeks because that buyer pool is like 0.3% in Grand Rapids. It's just a smaller buyer pool. But it depends on where it is, what the product is, but things are moving quick. And despite having a lot of probably homes coming pre-spring break, post-spring break into the summer, that's a typical time of when we see an influx in inventory. I think it's going to be really low.
Okay, so what I'm hearing is inventory is going to stay low,
Yeah.
demand's going to increase, rates will stay steady.
Yeah.
Are there other key trends that you're seeing that could change prices or change demand or behavior from a real estate?
I just caution people, buyers specifically, whether they're first-time buyers or looking for that move-up house. I'm telling them to get in the market now. I do really believe that. I think Grand Rapids is going to continue to trend higher and higher price point. If interest rates come down 1%, things are going to go crazy.
Yeah.
Then 3x buyers are going to come out. All those buyers waiting. If we ever see 5% again, 4% again, you are going to pay so much more for that house versus buying now and refinancing later.
Yeah.
So it doesn't work for everybody. I get some people can't afford that new interest rate or that larger house to get that extra bedroom, bathroom, acreage, whatever they're looking for. But I think if you can afford it, you should be in the market.
Yeah, and we've seen too, I mean, people were saying for a while, I think the sticker shock really set in for people where they're saying, maybe I was used to paying $2,000 a month for my mortgage, or whatever the number is, $4,000 at 3%. That people could not let go of 3%, seeing 6%. And I think to your point, life dictates sometimes changes that we have to make. Maybe we don't want to, and so I think the new norm has settled in. We're seeing this specifically in our industry where we weren't before. So that's an interesting trend we're seeing.
I think we're going to see more and more buyers just accepting that, and as long as they can afford that next bigger, better house, whatever it is, because it's time, they're outgrowing the space they're in, they're going to pull the trigger.
So what are the steps people should take now to prepare if they want to move here maybe in the next 3 to 6 months to get ready to actually pull that trigger?
For the buyer side?
Yeah, or seller side.
Yeah, I think let's start with sellers. I think if you're on the fence, you're talking about selling, a lot of times getting with a qualified realtor to come through the house, even if it's 3 months before, 3 years before, it's sometimes good to have a game plan for your house. So what improvements could you make? I'm not a big advocate of spending tons of money to get a house ready for the market, especially in a good market. But things like decluttering, obviously cleaning, and then the third thing that I think always makes sense is painting. Painting is cheap. I have a great painter that is so reasonably priced, and it makes such a world of difference to get a house ready. Get rid of some of the colors that are out of style, out of trend, whatever, or touching up the the trim, the baseboards, all that kind of stuff. Just making that house feel better, look better, and getting ahead of it. And then also understanding what's it worth and what are the market projections for the future. So I do that all the time. No obligation. I come into houses and I'm just an advocate for you guys because I understand this is likely one of the biggest assets you guys have. And I truly believe that being prepared, having a game plan is the best way to do it. Buyer side, I mean, I think, understanding what you have, maybe you're selling and you're buying. So understand what is the process. Do you have to sell in order to buy? Talking to a lender, talking about what is your home currently worth? Well, how much equity do you have in your current home? And what is that next property going to ultimately cost you on a mortgage? Let alone like what's it going to cost to buy, but really understanding what those monthly amounts are going to cost you is truly probably the most important thing. And then figuring out that realtor that specializes in the area you want. I can't say enough about finding a hyper-local realtor that is really, really dialed into the neighborhood or the community you want to live in. Because if you find one like myself in the specific communities I work in, I control all the inventory. I sell home after home off market in our private placement program. So that's a big thing for both buyers and sellers that come into our world. We put deals together all the time that a lot of people, the general public, never see.
So 2 years ago, or maybe even 3 years ago, we were seeing like, hey, if you didn't come to the table with cash in hand, you probably weren't getting the deal. Is that still the case? Are contingencies acceptable? Because a lot of these people, if they are upgrading, it probably will be contingent in the higher end home market that you kind of specialize in. What are you seeing there?
I think there's some people have to sell to buy, right? I wouldn't say it's a death sentence, but it's a tough thing when the market starts heating up again, as we're seeing now. We put a lot of contingent purchases together in the previous 3 to 6 months when the market was slower and those sales weren't happening overnight like this. So I would say it kind of depends on the product you're buying, how long it's been on. Is it an off-market purchase? Because sometimes those sellers are more apt to say, we'll give you time to sell your home and, we're not in a huge rush right now. So it's situational. But overall, I would say, like, getting your ducks in a row, having a game plan is important, and then executing.
Well, another thing on that point is what people don't realize is sometimes they can afford to carry two houses for a short amount of time. It doesn't need to be a contingent offer with the limited inventory here, you will sell your house.
Correct.
It might take you a month longer than you prefer,
Yeah.
but to totally price yourself out of a deal by making it contingent doesn't really have to happen if you understand how the numbers
Right.
will work in the
Right.
background too. And I don't know if you coach people through that. Or...
Yeah, I would argue again, a lender, a banker, your financial advisor can help you understand, kind of making some of those personal decisions. There is some risk, sure, to carrying two homes. Very low risk in the current market because homes are selling quickly. So if you have a good home and you price it well, it's going to move. Now people can get home equity lines, they can get bridge loans, they can do things to offset the idea of a contingent offer.
Right.
Because in multiple offer situations, which we are starting to see again, not all properties, but we're starting to see again here in March, it is going to be very hard if you have to drag your home sale into purchasing that next property.
Yeah.
Yeah.
I just hate to see people lose out on deals because they think they had to do it one way when there were three options they didn't even consider.
Yeah, and that's why, having those conversations ahead of that, when that perfect house pops up, and having a game plan is important.
Yeah. Well, Kyle, thanks for your time today. We've appreciated having you. Thanks for giving us a little bit of insight into your world, the luxury housing market in Grand Rapids. Yeah. If anyone needs to get a hold of you, feel free to reach out to us. We'll have Kyle's contact information, and thanks for joining us today.
Yeah. Appreciate you having me.
Let's keep moving forward.
Let's do it. See you.
Together.